What's good, y'all? It's Joel, and I'm coming back at y'all with another video. So with this video, this is going to be a recap of NAS for Wednesday, September 6th. So as always, jumping into the Forex Factory calendar for September 6th, we only have a news event at 10 a.m. And just for a quick overview, I guess look ahead for the rest of the week. Thursday we have a news event at 8:30, which this is fine to trade for, and Friday is no news, which I'll be behind the charts for. So be providing breakdowns of the 6th, 7th, and 8th. So I guess we can jump right into the 6th, which was earlier today. So this was a non-trading day, and you guys will see why. Here, once again, we have the 8:15 8:30 candle. At this point, we mark the most obvious swing highs and swing lows, which this would be the most obvious swing high that would have buy side liquidity right here, and then the most obvious swing low. Um, this looks like an equal low, but I like to always look at the raw values um, of the low. So for example, if you pay attention to the L values right here where my cursor is at, L shows the low. Right, hover my mouse over. This candle, the low is 456, while the candle to the left is 456.2. So these two candles are technically not equal lows, which that would fit the criteria for it being a swing low, which can serve as my sell side liquidity. So this is basically the high and the low that I'm using. This is the range for the day that I'm focused on. Right. So after our liquidity pools on 15-minute will mark, now we jump right into the 1 minute to see what happens with price. So this next candle is the 8:30 candle. This is when the quote unquote hunt begins, right? Where price will begin pricing itself to take out or possibly target one of the liquidity pools, right? So boom, at 8:35, right? You see shortly after 8:30, the sell side liquidity was taken. So at this point, I like to mark it with a red eyeball, letting me know that sell side is taken. Now, at this point, I really don't care what price action, like what happens with price action from now until 9:30. In short, just to keep it simple for you guys, if this is the lowest low that's formed prior to 9:30, then I would want to see price push lower, right? Delivering us a deeper retracement under this level, creating the lowest low of the session. So then it can break structure, hopefully break structure and give us a fair value gap to take it to the buy side liquidity as our final target. So that's essentially what I'm looking for in simple terms. So we'll keep pushing through, right? You see price push deeper, and then it's slowly starting to expand away. So just to make sure we're all on the same page, I really don't care what's going on with price right here. I am simply waiting for another push below because remember, once liquidity, once price purge into sell side liquidity, we are automatically bullish, right? We have a buy bias, right? We want to take price for a buy. We want to take price higher. But in order for us to take price higher, we want to catch it at a low point, right? We don't want to um, take a trade somewhere in the middle and then have to put our stop loss down here just to have a take profit up here. No, we're trying to have an entry somewhere low, right? Put a stop loss under here and then take profit up here so we can actually have a strong risk to reward. So I really don't care what happens with price. I just want to see after 9:30, I want to see price push under this level and then break above. So I'm just marking these levels just so you guys can better understand my strategy and understand the logic behind it, right? Um, in short, I'm following the logic of like buy low and sell high, right? So here I would want to enter low and then sell it when it's like up here to be able to profit off the entire move. Um, so as I keep fast forwarding it, right, we're seeing just candles. Whoa, okay, sorry. So this large black candle right here, this was the 9:30 open, right? So remember, after 9:30, this liquidity pool is still intact, right? No candle ever purged it, so this is still intact. 9:30 push gave us an aggressive bearish candle. So once again, I'm waiting for price to push under this level right here to see if it can eventually deliver us an entry. So you see another bearish candle. It made equal highs up here, which, which you know, for retail traders, they basically jumped in for a sell, right? But we see that as liquidity. So for me, that is another target up north, right? So it's one target up here for buy side liquidity, and then another target up here for additional liquidity. So these are essentially two targets for me, right? You see this next candle that opened up pushed under the low. So now we created a new low under this level. So here's the thing. For me, I would have marked this as the last swing, right? For a break of structure, but the problem is it made equal highs, and I know a lot of times price doesn't. I've been, looking at this pair for many weeks, many months at this point, and I've noticed that price really doesn't consider equal highs or equal lows as like a break of structure. So in my at this position, what I'm want to see from price, right? Price made its move down here. I want to see price do something like this, right? Deliver us another push lower, right? So then once we have that, this would be the last high before we break structure to the upside, right? And then if we push down, hopefully we get a fair value gap at this level here to then take it as an entry and then ride it all the way up to this buy side liquidity. So that's essentially what I'm looking to do, right? I don't consider these equal highs to serve as a structure point just because price usually doesn't consider that as like a break of structure. So I want to see price make an even deeper retracement, leaving a swing high, so I can consider it to be structure, right? So we're seeing price uh, push further down, right? So in order for me to consider it a swing high, right, even though we see like a three candle pattern right here that could count as a swing, I would have needed price to push down and clear this level, right? Because I consider a break of structure. Like when price makes a deeper retracement, I try to find the last swing um, before the push lower, right? So this candle, this low was taken with like these highs over here. And then if this candle pushed all the way under this level, then this probably would have been the high. But we don't really get that, right? Price instead starts reversing and then ultimately takes out the buy side liquidity, right? So once again, just as you guys have been seeing virtually every single video I post about NAS, you're seeing that price is playing both sides, right? Price would come down, take sell side, and then reverse and go take buy side, or vice versa. You're seeing the majority of the videos, price go up, take buy side, and then break structure and start going back down and take sell side. So at this point, this shouldn't be anything new for you guys, right? To see it unfold every single time. But what's actually super interesting is what happens with the rest of the trading day. So just so you guys know, this candle up here at 9:45, this is the candle that purged buy side liquidity. So because price never gave us um a proper structure break or an entry or anything, there was no trade for us to take. So by 9:45 I was done with my day. I knew that this was a non-trading day. There's nothing for me to engage with in price because both liquidity pools were taken. So this is just a day where you just do nothing, right? You just stand still. You don't take any trades, and by 9:45 your trading day is done. So you pretty much just like close your trading view and just go about your day and show up the next day, right? But what was super interesting was what happened with the rest of the day, right? So if I show you guys what happens, right, you see that after that purge, just make it to 11, right? So 11 is usually when it would be my cutoff for sure. Like let's just say if a setup was presenting itself, 11 o'clock would be the very last point in time where I would consider taking a trade. But both liquidity pools are already taken, so there's nothing to trade at this point. But what was super interesting is how, if you guys notice, buy side and sell side liquidity, you can consider this as the range, as the trading range that we were focused on, and you see how that price comes down. Um, first with this move after 8:30, right? It takes out sell side over here. Then it makes a deeper push lower, which is what we were anticipating. Then price actually pushes up, purges into the buy side liquidity, and then after this tap up here, you see that price never returns above this level. Price goes down, right? It makes a slight retracement, getting close to the highest high, and then price literally just rejects, like it absolutely just melts and just tanks lower. Um, the reason why this is super interesting is because this ties into the logic that we trade with, right? We trade with the understanding and the belief that price is moving in order to one, um, fill imbalances or inefficiencies, but two, most importantly, price is moving in order to activate orders. And the reason why I say that is because this level up here, I marked it as buy side liquidity, but that's because traders will have buy stops above this level. So what that means, if you guys are familiar with the different types of trades you can take, right? You can take a market execution, which is either a buy or sell at whatever wherever price is, right? Then you have your um, buy limit and sell limit orders, which if I put um, a a limit order, basically if price touches your level, you get thrown into that sort of trade. So you can only put a buy limit at the bottom and a sell limit at the top. But in this case, right, there's a lot of traders and just large firms that would trade with buy stops and sell stops. So what they would do is above this level, right? The reason why we market buy side liquidity is because they would actually put buy stops at this high, which essentially means think of a buy stop as like a bus stop, where if let's just say for example this is your bus, say at this high of a candle you're waiting for the bus, right, and the bus is coming down the street in this direction. If you follow my cursor, right, let's just say the bus is coming that way, right, and this is you, right, you're just waiting at the bus stop, right, the bus is coming that way, the bus will come stop here, pick you up, and then continue heading in the same direction. So the same idea um with a buy stop, right, is basically traders um, have buy stops at this level, anticipating that when price touches this level, it'll continue going higher. So just imagine when price came up here and slashed this high, immediately there were traders that were like thrusted into their positions. Maybe it might have been something like this, right? Like a buy order, right? Because they anticipate, oh, when price breaks this level, or even breakout traders, right? Traders that expect price to go higher, right? They'll see price coming up here and they're like, okay, price is breaking this level. This new level that's resistance is going to be support. So then they're entering buys only for price to come down and, take them for a joyride. Now, if these traders have stop losses, then, I'm sure they'll be in a much better position. But if a trader jumped in without a stop loss because they were confident that their position was going to win, imagine like entering here and then checking your position an hour later and seeing that you were down, so many pips, right? Like a trader, you don't want to get trapped. As a trader, you want to be put in that position. So this is this is the market for what it is, right? Like the market operates to go after liquidity, right? Because it moves an algorithm, right? It moves in a certain fashion to generate orders, to generate liquidity, so that the market could eventually target those orders, to take those traders out and eventually profit for themselves. So that's the logic behind it. It's super interesting because when you see price from this lens, you sort of can't unsee anymore, right? Because you already know what price is up to, right? Like price came up, slashed it, and as soon as it slashed it, it went back down, it retraced, but didn't really take the high again. I'm sure this was to like entice traders, to have traders think that price is still bullish after the slash up, and then more traders entered in buy positions because they expect the price to still go up, and then guess what, price rejects and goes all the way down. So um this was like super interesting trading day, not because we took any trades today, right? This was a non-trading day, but it was super interesting because the logic was there, the same strategy, the same model that we follow was there, even though it didn't give us, a break of structure or an entry, right? The logic of the model, of the strategy, that price is playing both sides, that price attacks one liquidity pool and then goes after the other, that is intact, right? Like you're still seeing this happen every single day over and over. So all it is, in order to be a successful trader, all it is just you need to find something that repeats in the market, right? Because the market, once again, is run by algorithm. Basically, just think of it as a robot, a computer that's controlling everything. Um, and just as you and I are humans and we have human behavior, right? We're creatures of habit, is the same with the algorithm, right? Certain things are gonna happen over and over and over, and all you have to do is just spot it and be able to wait for an opportunity to enter a trade. So this was just a non-trading day for me, but seeing this does not surprise me because I anticipate something like this happening over and over and over, right? And this is gonna keep happening. So all it is just getting yourself accustomed to training your eyes to see it, right? And just, understanding the logic as far as like my strategy, right? I'm trying to, if sell side gets taken after 9:30, I want to see the low and make the lowest low of the session So then we can break structure higher and go bullish to then take it to the buy side liquidity, right? Same thing in reverse. If price came up and took buy side liquidity first, prior to like between 8:30 and 9:30, then after 9:30, I want to see a push even higher to make the highest high of the session, right, of New York session, and then I want to see a break lower and a fair value gap left so that we can take price all the way down to the opposing sell side liquidity pool. So this strategy I feel is very simple, just because you don't need to worry about daily buys or anything. I only use a 15-minute time frame to mark up my liquidity pools, and then when it's if price is delivering me an entry, I pretty much just use the 3 minute, 2 minute, 1 minute. Usually the 1 minute time frame, but these are the three time frames that I use for an entry. So I feel like the strategy is it's pretty simple. All it is just being able to spot these things happen over and over. So that was pretty much the recap for the day. So we'll be back behind the charts tomorrow and Friday to see what the market gives. We'll see if it allows us, if it presents us a trade for us to take it. Till then, we'll just be patient until the market, gives us an opportunity to take a trade. So if you enjoyed this video, do leave a like, subscribe, comment any questions you may have, or any thoughts if you found this helpful. Uh, your support is greatly appreciated. If you want to share this video with someone who you feel may benefit from this. Once again, this is Joel, and I'm out. See you guys next video. Peace.